Welcome from GrapCoin's YouTube channel. I discussed the near term in this update video. The 138 and 138% Fibonacci extension levels of this likely first setup are rejected in the near term. Why is it crucial to comprehend or give this some thought? Since I wasn't sure if we had reached the bottom of this wave 2 pullback, as you may remember, I mentioned in the previous video, so we have. Given that the low came on April 13th and there is currently a strong 3-wave rebound, I would need to see another 4-5 pattern before declaring this to have bottomed. At least 5 waves upward in a row must occur before we can declare a bottom. In this case, the third wave ought to reach the 1.38 extension if the 5-wave pattern adheres to specific Fibonacci principles. The fifth wave is probably going to hit the 1.618 extension, or $820/4 in this instance, as was previously mentioned. We're headed in the right direction, even though we're not quite there yet. A third wave did, as we had projected, strike the 1.38 extension at $764. The fourth wave was this one. It might still be a corrective wave with a high B wave, signaling a short-term negative trend, but we want 5 waves since there is a support region dividing the short-term bullish and short-term bearish potential. First and foremost, I think that most of this recovery from April's low point has already taken place. We have already seen 3 waves. If we receive another 4 or 5, this might be the beginning of a new wave. The third wave, which is more strongly trending upward, is this one. A support area can then be used to extend the subsequent wave 2 pullback, resulting in a 1-2 setup. This suggests that a third of a third wave rise is probably about to start. This implies that we should go back to the current price level and avoid climbing in wave 2, even if there is one more high. That means you won't miss anything if you choose to wait for 5 waves, right? The market ought to act in this way. While it is not a given, we now need 5 waves to have significant, let's say, evidence that a low has developed, as this may be a high B wave. There have only been 3 waves of this rally thus far. Alright, so these are the 5 waves, but the initial move must also be taken into account. We should treat blue wave B as the blue count until the market gives us a 5W, because it has a greater ABC structure. Importantly, the bottom support area was never touched, which is why I really appreciate the blue count. Another cause is resistance to structure. If we view the entire upward advance as a possible 5-wave pattern up to the March high, then this is a 3-wave drop. That's all well and good, but that's not very dependable considering how deep it was. It wasn't even close to a healthy wave. A rising market, I like the blue count better than the yellow one, because while pullbacks can be brief, we still need to take that into account. Since we only saw 3 waves down, I might increase the likelihood of the blue count. Nevertheless, a 3-wave move down would have been more obviously bearish if there had been 5 waves. I can't completely rule out yellow though. It would make much more sense to drop 5 waves. The study indicates fairly definitive pivot points and support levels to monitor, even in situations where the market's intentions are not quite evident. We could currently fall in this way for a big drop into the support area mentioned in the most recent version. The pricing is between $6.79 and $9.68. I updated today. The notion that this is a diagonal pattern preceding the surprise at the 579 level is one that I don't want to completely rule out. There are 5 waves that we will receive if the yellow count doesn't change. It might be a diagonal pattern, even if it looks like an impulse. We shouldn't even go below $68 in the yellow count, but there is a small buffer zone down to $579. Below 579, the probability is obviously smaller. Should everything proceed according to schedule, there will be 2 levels on the blue count to be cautious of 385 and 296. By determining the A wave's length and B wave's peak, respectively, we can discover more information. This provides us with 363, the 100% extension level, that is in the middle of these 2 categories. In addition to the 1.236 enlargement, which provides us an even smaller target area, that is another level to be mindful of. Ideally, the upper part of that wider support zone should be where wave C ends. That's my knee update. If you found it helpful, just hit the like button and leave a comment. Thank you for viewing GrapCoin.